While many stock markets are at record highs, the stock prices of many smaller companies have suffered recently as investors are hit with higher interest rates and also chasing bigger corporate profits. Joining me to discuss how to identify undervalued small and microcap ASX stocks is lead portfolio manager for WAM Microcap, Oscar Oberg. Oscar, welcome.
Yeah, well, thank you. No, I really appreciate it.
Against a backdrop of many investors leaving smaller companies, what factors are you looking for in smaller companies that make them attractive to invest in? And can you give me an example of a successful investment?
So in terms of how we start at Wilson Asset Management, we follow our investment process and we're looking for a very good management team and board. We also want a very strong position in the sector this company is in. And we also want a growth rate that's higher than its valuation. We also need a catalyst that could see the company re-rate over time. And if you look through our history, I think always the successful companies that we've invested in usually starts with management and the board. And I think that's always, for a retail investor, that's always very important to look at the track record of the management team. Are they a founder? Do they own shares in the company? Are they fully invested alongside you as a shareholder? And when that generally occurs, that you generally have a good outcome with the share price. And I think one of our best examples was the spin-off of TPG Singapore, which is called TUA. That came out of TPG, which obviously third largest telco in Australia, given under Vodafone. It got sold off. It spun off. It was a very small company. People didn't know really what it was. And at about we bought shares at about $1. And our real thesis there at that point in time, it was at that point had an attractive valuation, but really it was where David Teo, the founder of TPG, he'd actually bought more shares and it was a significant shareholder. And our view was, well, if he's there, he's obviously got a very positive outlook on Singapore and where that business can get to. And, you know, as we sit here today, it's $3.70, been a very successful investment. So, yeah, hopefully that gives you a flavor of how we invest and always to back founders.
Absolutely. Always very important to back the founders and have skin in the game. WAM Microcap is all about identifying market mispricing opportunities as well that enables you really to beat the S&P ASX Small Industries Index. In which sectors do you see the biggest opportunities this year? And what's your outlook for microcap performance in 2024?
I think it's a tale of two halves, really. I mean, what we're seeing in the markets really since December, when the US Federal Reserve basically put a stop, let's call it, at least for now, for interest rate hikes, is there's been a real swing back to smaller companies. But when that occurs, it's usually at the larger end of small companies where we've seen the demand return and the share prices respond positively. At the lower end where microcaps sit, it's very, very, I'd almost say dead at the moment. And that's just purely because they're just out of favor at the moment. They're smaller companies. People aren't looking there. They're looking at the larger small cap companies, which are doing well. However, if we think this, and we're quite bullish on the market, just generally into the next 12 months. But if this market continues, we think as those larger small cap companies become more expensive, they'll shift down into microcap companies. And we saw that through 2020 and 2021. And, you know, Lel, you talked about the market-driven process within WAM Microcap, which is broadly about 50% of the companies we invest in. One part of the market that's effectively disappeared really for 2.5 years has been equity capital markets activity. That's initial public offerings, capital raisings, and so forth. And that's usually quite a large part of our fund. And hasn't been around. So we think that will improve over the next 12 to 24 months as interest rates flatten out, companies get more confident about making an acquisition, raising some money. And so we think that part of our portfolio will actually do quite well. So in summary, first half, I think it's pretty quiet and building. I think the second half of this calendar year should be really good for the microcap sector.
Fantastic. Looking forward to it. And while on smaller companies, they do often present a bit of a risk of not having the same governance standards of larger companies, putting retail shareholders in particular at risk. How do you personally navigate these risks, and what tips may you have for retail shareholders that are looking to invest in microcap or smaller companies?
Yeah, I think it's consistency. And I talked about management before. That's very, very important. Management and the board. You know, when you invest in a company and a founder owns, I don't know, 10% of the company and suddenly sells that whole holding, that should be a warning sign for investors. I think changes in strategy are also a red flag. You know, companies going this way and suddenly they go, oh no, we're going to go that way and do something entirely different. That is always a worry for us. So I think it's for retail investors, the most important thing is when you buy a company, you just got to keep monitoring the ASX announcements as much as you can. Ask yourself, is the story changing? Are management and the board aligned with you? And if the answer is yes, then that's usually a good sign. But if the answer is no, then you probably got to, you know, have a look at your investment and work out, you know, is this the right investment for me?
Absolutely. Very good advice. Thank you very much, Oscar. And I'll be hoping for that microcap small company recovery myself as the year continues.
Yeah, thanks. I appreciate it.